Hi, Warriors. Huge day yesterday with just a shade better than the inflation that was expected on the CPI, but the dollar got hammered. So actually, I was expecting last week's low to hold, and I was looking at resistance in euro at 108. And so obviously, we definitely surpassed them both. But I want to just really make a major point here on the dollar. So on the dollar, uh, we're at 38% back, right around here. This is a 200 day at 103 and a half, and then you go out to the weekly, you have 103 and a half as well holding here. Okay, it still looks like a very ugly week, but the weekly moving average, there it is. Thank you, green line, comes in at 103.60. So this is really the line in the sand for whether or not this rally that we had can give us one more advance. So 103.66. Everyone started to write off the yen as well, but you look at the yen and it's really coming back. It's still put in a higher low, and I think part of the scenario is I'm looking for TLT. I believe that was the end of this advance in the bond market for now. I'm not looking for new lows, but if that's the case, why can't the yen rally one more time? I see two highs here. I see one. I see two. Maybe we get one more. We'll see what happens. Again, I want to show you the yields because that's important with the yen. So this is not what I wanted. I want to show you the, okay, I got it. Okay. So the 10-year, after the PPI that we had today, the 10-year is advancing 6 bips. Now, I showed this before. The number is that on the 10-year, we have the potential of 3 drives here. All right. So I'm not saying that we're going to make new highs in yields, but maybe rally back to 470. And TLT, I think, peaked for this first wave a little over 90. And so this will be the first wave up. I'm looking for a pullback, maybe into the 86 level. We'll see in the days ahead. And again, getting back to the dollar, it's a very important level that I just pointed out. As far as weakness, it's really in cable. Cable went to major resistance. Hard to fade it with the RSI doing this, but I'm not going to, uh, you know, a lot of people be buying the breaks. But I'm not convinced this is the end of the dollar rally. We'll see. We're getting a little bounce here. It's okay to do nothing and then maybe let the first rally happen, see what happens on the next pullback. But yields, I think that's it for now. Now, silver, once we negated that 2240 breakdown here, and it really started on Monday with a reversal day, and we've cleaned out almost all the stops up here. It looks fantastic. But look at gold. Gold just looked like to me just another bounce after an $80 decline. It was about $80, 1930, 2010, and has a completely different look. So I'm not convinced about the gold yet either. And if we start taking out 1930, I think you'd be looking at 1800 handles. So not convinced about the gold. Gold silver ratio now favors silver. I'm not going to chase the silver either in on leveraged investments, but you guys know I've been monitoring some shares, and the one that I've been saying for weeks had the best look because it wasn't making new lows with the rest of the market is this Fortuna. So, looks to me like a pretty clean breakout here. So if you're afraid of missing something, like I was saying in here, you have a little something on. you have nothing on, you could always put a little something on and, maybe buy a pullback to 310 or $3 if it happens with a dollar rally. And why don't we just cover the monster? And the monster, of course, is S&Ps. But before I get to that, crude oil, I talked about it not being able that we'd have a failing rally, little bounce towards resistance at 80. That's what happened. I think we're going to take out these lows. I can't rule out $60 in crude. And now let's take a look at one of the most powerful rallies I've seen in a long time, and that's here in the S&Ps. So this 45.0102 level, which it's above right now, was 78% back. And we'll see. I'd be taking profits. There you go. There's a daily. Be careful if we get back under, this move completely caught me offside. In fact, I want to make it clear to people. I don't walk on waters. These are major news red event trades that change the trend overnight. I mean, look at this. GDX. It's up a little today. See this close? This was Tuesday. Okay. Was that a buy? It looked like it could be on its way to new lows. And then we have the CPI and it gaps up, and now it could be the potential head and shoulders bottom, with this being the right shoulder. So you could buy, if you want to buy GDX, you could buy it, be wrong under these lows. We should head back up to 30 if we don't get that pullback in gold and the dollar rally. So definitely gold, a lot of these things are happening on the red events. Last week was a week full of them, and this week CPI was that. The only difference now is that the markets don't have lower yields working for them probably for a few weeks. I wanted to cover Aussie. Aussie made a new high marginally from last week. Looked like it was going to fail and go to my 62 target on Tuesday. Or this was Monday, Tuesday. Okay, this is it. And looked pretty ugly. Thought we were going to go there. And then again, everything turned on that CPI number. But, I still don't think this is a breakout. And there is still a possibility for 62. So these are the times, and it's not easy to do, that you say, okay, maybe things have turned, but I'm not going to get FOMO. I'm not going to chase these markets and not get great entries that give me marginal risk. So if I jump in on these trades right now, I have to risk the lows. So even if I want to buy Aussie, I would be patient and wait for some type of pullback to where I was closer to where I was going to be wrong than up here. I'm not going to buy it at 65 and risk 62.80 for a long side position there. And I still believe that there is a chance, and the yen showing the way, that there's no follow through in the yen to the downside. And the yen, if it rallies to new highs, should continue to pressure metals a bit. So what I'm saying is there are times to do nothing and sit there with the anxiety that you missed a major turn, or you just launch and accept bigger risk on the entry. And if you're going to do that, reduce size, hope you're early, and that the market takes some time to really get underway in the direction that you're looking for. So I guess today's lesson is I miss things every day. So don't be afraid or feel bad if you miss things, but don't compound the error of missing things by getting FOMO and chasing things. Accept that maybe you did miss something, but there'll be another bus around the corner. And be careful with the S&Ps up here, because this move right here, I'm talking to people where there's a lot of negative breath with this happening here. And let's see, it's due for some type of reversal day here. Gold is now lower on the day, and it's still my assumption that we're going to take out these moving averages here and trade lower. And if not, and it runs without me, c'est la vie. So good luck today, everyone. I'll see you in the room. Don't just count your pips, count your blessings, and be patient. And if you miss something, that's okay. There'll be another setup down the road for you to participate. It's not going to run away and never give you another chance to buy or sell something. So the worst thing you could do is become emotional about missing something and just launch at a stretched area. Okay, everyone, good luck the rest of the day. See you in the room.